E-invoicing is no longer a future project in the UAE. It is officially on the calendar. So while businesses are busy understanding the UAE and UAE VAT and corporate tax treatment, e-invoicing is quietly reshaping how the transaction will be reported, validated and analyzed tomorrow. So the real question now is e-invoicing just a compliance requirement, or does it fundamentally change how the finance team operate? So when we are talking about e-invoicing, it's not just about the invoice format. It's about the real-time transaction visibility to the tax authority. So that was phase 1 and e-invoicing is the phase 2 of compliance maturity. To break this down, I am joined by CA Mahalaxmi Mallya, who is a qualified chartered accountant, trusted tax advisor and someone who has a real ability to explain a complex topic. Mahalakshmi has over 9 years of experience in direct tax and indirect tax and over 4 years of post qualification experience in e-invoicing, UAE corporate tax, VAT. Mahalakshmi, great to have you on the show. I have given a brief introduction of yourself, but we wanted to know about, can you just walk through us your professional journey? What initially sparked your interest in your field?
So before I give an introduction about myself or how my professional journey looks like, so thank you first of all CA Saurabh for the kind introduction. I'm really glad to be here. Thanks to FintEdu as well. Well, to begin with the professional journey, let's say you're getting me back to good old days of 2016, where I began my professional journey as an article trainee. So as an article trainee, for me, the articleship was much more, it was nothing less than an exceptional period. So you can say that in 2016 when I started, immediately like after 6 months of my articleship, I was given like complex tasks in my articleship itself, like scrutiny, search cases, appeals, which helped me, shape my analytical and technical skills. And then in 2021, till 2021, I was in India, of course, predominantly in direct taxes. After 2021, in 2022, I moved to UAE. At that point of time, honestly speaking, I was reconsidering my decision whether should I remain in UAE or go back, because corporate tax was not implemented at that point of time, right? So I was really concerned about that. But thanks to my mentors and fellow colleagues who were there with me at that point of time, who helped me, rethink that yes, I can explore different verticals of the tax. So that's where I started my journey in VAT and ESR compliances.
Okay.
And then moving further, of course, the last 10 years of my professional journey, it has been really quite rewarding. So at this stage, I want to say that because of the VAT that I took up 4 years back, it's helping me definitely in doing the gap assessment that we are doing today from an e-invoicing perspective.
Yeah.
So my last 10 years definitely has been rewarding, both professionally as well as personally. And I want to thank all the mentors and my fellow colleagues who has been there with me in the decade full of journey. As you rightly summed up, e-invoicing is not just a simple format change or a technical upgrade. It's of course much more beyond the compliance. So what's going to happen going forward is real-time reporting or near real-time reporting to the tax authorities, right? If you see in the past, in many ways, the VAT return that we submitted to the tax authority was more about the things that happened after a transaction took place. Now, after e-invoicing comes into place, it's more about deciding the VAT treatment or doing things right when a transaction is happening.
Yeah.
So this is much more beyond the compliance, and I believe that all of the IT team or let's say operational team, finance team have to come together in order to ensure that FTA does not come beyond your back.
Yeah.
So I would be happy to run through the practical implications and what businesses need to prepare for in order to do their implementation right from the first day.
Okay, great. Very happy to understand your basic knowledge and the professional journey. So Mahalakshmi, let's start about e-invoicing. Let's start from the basic. Okay. So UAE has officially announced the e-invoicing roadmap. So there are various terms that people use like DCTCE model, people network, what is file corners and all. So we wanted to know your high level bird's eye view regarding e-invoicing.
Okay. That's a very good question. I think a lot of people are stuck behind these terms, right? So, before we understand what's going to happen, let's understand what is happening currently, right? So, starting with how the invoicing process works today, typically it's a two-corner model. So, supplier or the issuer of the invoice raises invoices in his ERP system
Yeah.
and thereafter transmits it either through email or as a hard copy to the buyer,
Yeah.
right? So now, after e-invoicing comes into place, there's a shift in how the invoicing process works. So basically, if you see in UAE, it's something called as decentralized model, which is a five-corner model adopted in the UAE.
Yeah.
So that's where we talk about DCTCE model, which is a complex word. So let me simplify what does that DCTCE means.
Okay.
So DCTCE basically stands for Decentralized Continuous Transaction Control and Exchange. So now, before you understand the decentralized model, let's understand what is centralized model, which helps us in clarifying what is decentralized model. So if you see what is a centralized model, typically what happens in a centralized model is the invoices are validated and received by tax authorities instantly. And tax authorities validate, and it is standing as a middle person in the transaction flow.
Yeah.
But unlike in a decentralized model, contradictory to centralized model is a decentralized model. In a decentralized model, typically the invoices are not validated by the Federal Tax Authority.
Yeah.
But does FTA get hold of the invoices? Yes, definitely FTA get hold of 100% of the invoices. But they are not going to be validated. So the question may arise as to who will validate it then, right? So that's where FTA is designated a third party service provider called as the approved service provider or accredited service provider.
Yeah.
So these accredited service provider, typically they validate the invoices. Now, to what extent they validate is the extent as per the e-invoicing legislation.
Okay.
So they do not validate it from a tax legislation perspective per se.
Okay.
So now invoices will reach indirectly through this ASPs to the FTA. So the taxpayer per se need not send the invoices to the FTA, rather they send the invoices to the ASPs.
Yeah.
So what's going to change is how the five-corner model will flow. So as per the five-corner model, it's typically five parties that are involved in the invoicing framework, starting with the invoice issuer.
Yeah.
So the invoice issuer will raise the invoices in his ERP system. Thereafter, he will transmit this invoice electronically to the ASP.
Yes. Yeah.
Now the ASP will send one copy of this invoice to the FTA. Simultaneously, he will send it to the buyer's ASP. Buyer's ASP again will validate this from an e-invoicing perspective, and then he will transmit to buyer. Again, the buyer's ASP is going to send a copy of it to the FTA.
Yeah.
So FTA here is going to receive invoices from two parties. The same invoices will be received from the buyer's ASP as well as from the seller's ASP.
Yeah.
Now, we spoke about electronic transmission, right? So, few of them may have a question like, even today I'm doing it electronically, right? But today what you're doing is a digital transmission, which is in the form of PDF or through email, right? But electronically will happen through a network. So that's where the term which is called as PEPPOL comes into place.
Yeah.
So PEPPOL is called as Pan-European Public Procurement Online. So this is just the abbreviation of PEPPOL. But in short, it is a network similar to how in a banking transaction you have SWIFT network. Similarly, in the e-invoicing framework, we have a PEPPOL network. So PEPPOL network will ensure the transmission of data electronically to the buyer and to the FTA. So it's a structured or a standardized format which is required for the electronic transmission of data, predominantly the e-invoices and e-credit notes,
Yeah.
in order to ensure the data is transmitted in a secured and a standardized way.
Yeah.
Now, moving forward to understand what happens in a PEPPOL network, or as a business, do I have access to the PEPPOL network,
Yeah.
right? So that's where there's ASP which comes into place, what we spoke previously.
Yeah.
So ASP are the access points who will give us access to this PEPPOL network by giving us an ID called as a PEPPOL ID. So per se, as a business, I do not need to enter into the PEPPOL network. So I integrate my system, or I agree with my ASP what is the method of transmission of the invoice, and these invoices will be transmitted through the PEPPOL network electronically.
Yeah.
Now currently, if you see, under a VAT legislation, there is a guiding rule which is specifically Article 59 of the VAT Executive Regulations. So this provides the elements or the layout of a tax invoice, right? And for a non-registrant, so far there is no guiding rule to determine what should be mentioned on an invoice.
Yeah.
But after e-invoicing comes into place, there is a guiding rule or the data elements that needs to be mentioned on the e-invoice or a e-credit note for both registrants as well as non-VAT registrants. So that is called as a PEPPOL framework in in a technical terms. Now, if you ask me as a business, do they need to know these technical terms? Honestly speaking, no.
Okay.
So what they need to know is PEPPOL framework.
Okay.
Why they need to know PEPPOL framework? Because it is the data elements that will be mentioned on an e-invoice or an e-credit note, right? So as a business, I need to raise invoice as per PEPPOL framework. So that is why I need to know as a business what is covered in this PEPPOL framework and what are the meanings of those data attributes.
So typically we have to check the PEPPOL network, our ASP, who is our ASP. We have to check the structure, understand the structure of e-invoicing before implement it. So the best thing I like about UAE E-Invoicing framework is it avoid bottlenecks. So the invoice transfer between buyer and supplier and the data transfer to FTA through ASP. That is the good thing that UAE framework includes. So FTA just want a data. They do not interested in your system and all. They just want a data without checking each and every invoices, right?
Yeah. So to add on this from a business lens perspective, as what you mentioned, right? So what is required per se is the way how the transactions will be handled at their core after the invoicing implementation, right? So there are certain steps or certain pre-indicators that needs to be considered. So as I mentioned, after e-invoicing comes into place, 100% of your invoices are reaching FTA, right? So one is your VAT treatment. That needs to be taken care of as and when the transaction is undertaken. Secondly, if you see what the MOF has done in the UAE, the e-invoicing per se, not every transaction requires an e-invoice. So there are transactions that are kept outside the ambit of e-invoicing as well, right? So that's where a reconciliation may be required between the e-invoicing data and the VAT return. Okay. So a mechanism needs to be built by the businesses prior to the implementation in order to ensure that their VAT return is submitted correctly.
Definitely.
And as you rightly pointed, ASP is a critical part of the ecosystem, right? So entering into an agreement with the ASP, deciding what should be the integration methods, and deciding what should be my message confirmation processes from the ASP to ensure that data has rightly reached the ASP and buyer or not. So all these things have to be taken care of by the businesses. And apart from that, the businesses need to understand one thing, that we are moving from a simple invoicing process to a structured data reporting format, right? So that's where prerequisite prior to implementation becomes key and crucial, and to ensure that if they do a last minute rush or incorrect implementation, it will definitely have consequences from a penalty perspective, both under e-invoicing as well as VAT regulations, as well as it could trigger FTA audits.
Definitely. So now we understood the ASP, people network, PINT, and the structure of e-invoicing, the five corner, how five corner will work. Now people are confusing in one question, that while determining the threshold of ASP. Okay, so as you told that government or Ministry of Finance excluded some transaction from the ASP. So now the confusion remains is that threshold for approaching the ASP. Okay, that threshold should be basis on net basis or the total turnover of the business. So that is very critical question nowadays. So what approach would you recommend to the companies adopt so that they don't underestimate the applicability and they avoid the unnecessary cost or reduce the efficiency?
Okay. So that's a pretty good question, and I would say that a lot of confusion around this question is lying in the market, right?
Yeah.
So to start with, I would say that if you see the ministerial decision, specifically ministerial decision number 244 of 2025, which has been released by the MOF.
Yeah.
Before I could give clarity on the threshold, I would want to highlight the implementation phased manner that is provided in the ministerial decision number 244. So as all of us are aware that there are 4 phases which is provided by the ministry, right? So starting with your pilot program.
Yeah.
So pilot program typically is applicable if as a taxpayer I agree in writing to state that yes, I want to be part of the taxpayer working group.
Yeah.
In that case, the implementation is as of 1st July 2026.
Yeah.
Then comes the second phase, which is phase number 2, applicable for businesses with revenue which is equal to or more than 50 million.
Okay.
In such case, the applicability is from 1st January 2027 and the ASP should be appointed by 31st July 2026.
Yeah.
Then the phase 3 is for people who are below 50 million, for businesses whose revenue is below 50 million.
Yeah.
In such case, the applicability is from 1st July 2027 and ASP should be appointed by 31st March 2027. And finally, it's for government entities, it's a relaxed timeline,
Yeah.
which is applicability from 1st October 2027 and ASP by 31st March 2027.
Okay.
As you rightly mentioned, there are certain transactions which are excluded from the e-invoicing ambit, right? So, very common exclusion is the business to consumer transactions,
Yeah.
which we call as B2C
B2C,
transactions. Now, there are other exclusions like exempted financial services, international transportation services provided by airlines. There are similar other exclusions which are provided by the MOF. Now, this is exactly where the confusion lies around, to say that since there are transactions which are within the ambit of e-invoicing and outside the ambit of e-invoicing, people are confused as to how do we determine the threshold for determining the timelines for appointment of ASP and for implementation date.
Yeah.
So, if you see the ministerial decision, for the purpose of determining the timelines, the word used is revenue.
Yeah.
So basically, it's as simple as the gross revenue as per your financial statements. So for the purpose of determining the threshold, the timelines for threshold specifically, you don't need to see whether there are transactions which are within the ambit or outside the ambit of e-invoicing. It is simply the revenue as per your P&L account.
Yeah.
So just to narrate an example, let's say for example, the financials of a business for 2025 states that the revenue as per P&L is 75 million.
Okay.
Now you don't go in depth and see what transaction is within the ambit or what transaction is outside the ambit of e-invoicing.
Yeah.
Since you're above 50 million, the applicability is from 1st January 2027 and the ASP shall be appointed by 31st July 2026.
Yeah.
Now there is one specific scenario where confusion arises. So that's where I would suggest maybe a conservative approach may be required. That's where an entity is making 100% business to consumer transactions. Now if you see the ministerial decision, it states that an entity who is having 100% B2C transactions, they can be kept outside the ambit of e-invoicing, meaning that they don't need to implement e-invoicing. But the real crux is what happens to your input VAT recovery, right? So if I have not implemented e-invoicing and if my supplier has implemented e-invoicing, then how do I receive the invoices? So plain reading of ministerial decision states that even though you are making 100% B2C transactions, in order to recover your input, you may be required to implement e-invoicing.
Okay.
But what happened recently in the ministerial MOF guideline which was released on 23rd Feb 2026, it had a specific clause which said that if my buyer has not implemented e-invoicing or if my buyer is not required to implement e-invoicing, in such case the supplier is required to raise the e-invoice with a dummy identifier.
Okay.
And to the buyer, he would send a regular tax invoice in the form of PDF.
Okay.
So this necessarily states that if you are having 100% B2C, then for your input transactions, you don't need to implement e-invoicing.
Yeah.
Of course, there are different interpretations in the market, And I would state that this is a call which the businesses need to take, because what clarification is provided in the form of a guideline, right? And the ministerial decision states that implementation is required if you have input VAT.
Yeah.
So of course precedence will be of ministerial decisions.
Yeah. So in my experience, regulator don't like the complex maths and complex calculation. So they are telling, okay, if your revenue on the profit and loss account exceed a specific threshold, that is 50 million, then you are ready to go. Otherwise you can wait for the extended deadline. Okay. So the most company get into trouble not because of intent, but because applicability what was assessed in silos. Okay. So now there are various cases that is used by the Ministry of Finance. So let's talk about the cases, use cases. The framework refers to the multiple use cases for the different scenario. For example, use cases for free zone entities, free zone transaction. The whether business need to tag a specific use cases to the invoicing itself, or there may be some different approach. And I think there is a tax system and operation really need to talk to each other, like finance team, IT team and the accounting team. They need to talk together and they need to work in synchronized way to implement the e-invoicing in most effective manner. So what is your thought on use cases?
So let's break down these questions. First of all, let's understand what's the relevance of use cases, right?
Yeah.
So starting with the relevance, so if you see in the UAE, what the MOF has done, instead of giving one simple tax invoice or one simple commercial invoice,
Yeah.
and giving the data attributes against it, it is divided or broken it into 16 use cases.
Okay.
Based on the business scenarios and the VAT applicability thereon.
Yeah.
So predominantly it's because of the VAT applicability, it is broken down the use cases into 16 use cases. Now, coming to the relevance, what is the relevance of this use cases? Ideally, use case number 1, which is on standard tax invoice, that's the main use case.
Yeah.
All other use cases will have only additional data attributes over and above the use case number 1.
Yeah.
So the relevance of use case per se is to identify what data attributes or what data elements need to be mentioned on my e-invoice or a e-credit note.
Yeah.
Now, you asked a question on whether per se the e-invoice should have the use case number, right? Use case number per se will not be mentioned on a tax invoice.
Okay.
But definitely there is an identifier called as the invoice transaction type code.
Okay.
So through invoice transaction type code, the use case will be mentioned on the invoice. So in order to arrive at the data string or the invoice transaction type code, it is a requirement to identify the use cases applicable.
Yeah.
Moving forward, practically we say that there are 16 use cases. I mean, theoretically we say there are 16 use cases, right? But practically it is less than 16 use cases. Why I'm saying this is basically because if you see the string which is defined under the invoice transaction type code, it does not have all the 16 use cases.
Yeah.
So it has around about 8 to 9 use cases. So rest of the use cases are simply in the form of invoice categories or invoice type codes.
Yeah.
Of course, these are too technical, so may not be a right forum to discuss this technical terms in further. Now specifically coming to free zones, right, which is use case number 8. So when the ministerial decision initially came or the public consultation document initially came, it simply mentioned that use case 8 is on supplies involving free trade zone.
Yeah.
Now when do we use it or what is the meaning of this? This was not cleared, right? So that's where ministry came up with the recent guidelines on 23rd Feb, wherein it clarified 3 scenarios under which you will use case number 8. So 3 scenarios are basically export of goods from the free zone and supply of goods within the free zone or supply to or from a party who is in the free zone.
Yeah.
Now, coming to the word free zone, right? Whether there is a confusion whether free zone is a designated free zone or a non-designated free zone is also covered. So let me give a parallels from a corporate tax perspective. So if you specifically see the corporate tax free zone guide, it has 2 definitions. one of free zone and another of designated free zone.
Yeah.
So designated free zone is specifically those designated under the VAT law, right? And normal free zones are all other free zones, which means it includes designated free zone
Yeah,
as well.
yeah.
So if you see the ministry guidelines, which is released on 23rd Feb, has the same free zone definition which is covered under the corporate tax law.
Yeah.
Meaning to say that this use case number 8 will apply to all designated as well as non-designated free zones.
Okay.
Now what is different in this use case number 8 is beneficiary ID. So a mandatory information called as beneficiary ID needs to be given in order for MOF or FTA to track the beneficial recipient of the supply.
Yeah.
Now why this is relevant to me, one of the thing that strikes to my mind when I think about beneficiary ID is basically from a corporate tax perspective qualifying free zone benefit, right? So that's where maybe FTA is tracking the beneficiary ID through the e-invoicing mechanism.
Yeah. So they usually wanted to connect the qualified free zone person benefit taxpayer and the invoicing implemented by the taxpayer. Maybe they want to connect all the transaction through e-invoicing so that they can track each and every transaction, right?
So in summary, use cases, yes, definitely a business need to identify, and more than one use case may be applicable for a single transaction.
Yeah.
So that's where we speak about gap assessments, which can be done either in-house if you have right tax and technical team, else it can be outsourced to an external advisor.
Yeah.
So that's the relevance of the use case in order to identify the use cases, in order to define what is the data attributes that needs to be mentioned in a particular invoice or a credit note going forward.
Yeah. So in my opinion, use cases are the logic layer of e-invoicing. Means without them, without use cases, FTA will just receive the data, not the intelligence. So e-invoicing is a framework where Excel have to retire. Now people have to think logically how the transaction flow, how the data is going to FTA and all. Okay. So next question is, what practical steps should business be taking now, even before they mandatorily covered? Okay. So if you had to give company just 3 priorities, that tax, system or people. So what are the 3 priorities that business have to focus before implementation of e-invoicing, while implementation of e-invoicing, and after all system and structure streamlined? What the priority that you prefer to give to the businessman?
So let's again break down this question into 2. So starting with how a practical approach or the steps that businesses need to take in order to implement e-invoicing correctly. First of all, I would say that understand the e-invoicing timelines in terms of appointment of ASP as well as implementation, and most importantly understand the penalties.
Yeah.
Once you know the penalties, of course urgency will come automatically within the businesses itself, right?
Definitely. Yeah.
So, and most importantly, a lot of people fail to understand that after e-invoicing implementation, it is not just the e-invoicing penalties that you will get, you will also get the penalties under the VAT law if the implementation and the VAT treatment that you adopt is not correct.
Okay.
So, moving forward, secondly, once you have determined your timelines and things, now the actual implementation has to be done, right? So that's where at the time of the gap assessment, do a high level VAT health check followed by a detailed gap assessment. Again, reiterating, it can be done internally if you have a right tax and technical team, or else it can be outsourced to an external advisor. Now this gap assessment basically will help you understand the use cases applicable, apply the VAT treatment rightly if it's incorrect, and then it will also help you understand what data needs to be mentioned on the e-invoice, right? Then moving forward, once the gap assessment is done, don't stop at that stage. Train your employees. That's very important.
That is very important.
So technically what happens once the gap assessment is done, either 1 or 2 people would have been involved in the gap assessment, right? But the people issuing the invoice may be different. So they need to be trained as to what data needs to be mentioned in the electronic invoice or electronic credit note. So that's very important to train your employees, who is especially in the front-end billing system. Then moving forward, your gap is ready. now you need to integrate, right? You need to transmit the invoices.
Yeah.
So that's where the question comes about integration. So in order to integrate, first you need to appoint the ASP, right?
Yeah.
Otherwise, what will you integrate with, right?
The first step is appointment of ASP. Yeah.
So in this process of appointing ASP, practically there are two approaches or two steps you can say. So one is enter into a commercial agreement with such ASP, written agreement, and then link your taxable person profile with the ASP profile before the deadline.
Okay.
So after you have decided who is your ASP, then arrive at the integration method. Integration method could be simply a API integration, or it could be flat file upload, SFTP, whatsoever that you agree with your ASP. Apart from that, also agree with your ASP on data security, data hosting. So there are a lot other confirmation message processes which you need to agree with your ASPs.
Yeah.
And based on the gap reports, determine or assess with the ASP as to what data you need to provide and what data can be defaulted or derived directly by the ASP. That's a very important step.
Yeah.
Now, after everything is done, testing prior to going live is again a crucial element, because if you don't test your reporting and exchange processes, then you may go wrong on the first day of implementation, right?
Because there are so many challenges that will come while you are testing, or the things that you will not know, okay, this might have happen, this might will happen. So testing is very much important before going live, right?
Absolutely.
Yeah.
So testing is a very important step prior to actual implementation, right? Now, moving forward to your second question, who is underestimated, right? I would say that based on my experience so far with the gap assessment, I would definitely say it's tax.
Okay.
Tax is what is underestimated at the moment. And why tax is underestimated? So today, when I meet the client, they tell me that we are 100% VAT compliant, and I don't need to do any VAT assessment or a health check prior to implementation of e-invoicing. But so far I have handled like 10 to 12 gap assessments, and every time I do a gap assessment, the first thing I saw was that there is a gap in the VAT. Okay. Now what happens if there is a gap in the VAT? The use cases that you link will go wrong, right? So that eventually your e-invoice itself is wrong. So that's where I feel that the tax part is very important, and there's a misconception, that e-invoicing is just a transmission process, which not exactly is right. E-invoicing should not be seen in isolation of VAT, because since 100% of your transaction is reported to FTA, and that invoice is going to have a VAT treatment on it. So that's where a VAT health check or a revalidation of your VAT treatment becomes very important, which businesses need to take seriously.
So you are trying to tell that, okay, if company, according to me, if company waits, then they will struggle a lot. And the one part that we or businessmen underestimated is the tax team, right? So the tax, whether it's VAT or maybe CT in some cases, should be integrated with IT, and so they all can implement e-invoicing in very efficient manner, right? So quick one wrap up question, that what's the single biggest mistake that businesses can make while e-invoicing implementation? And on a lighter note, do you think that e-invoicing will finally force finance, IT and tax team to work together, or what is your thought on this?
Well, again, I would say it's not just one single big mistake, but of course in the interest of time, I would highlight 3 key areas.
Okay.
So starting with today, when I meet the clients, they say that I have appointed ASP and my role is complete. Is that right? The answer is no. Of course, ASPs are part of the ecosystem, and they're an integral part of the ecosystem, you can say. But I would say, as you rightly mentioned, the IT team, the finance team, procurement team, all this of the business, along with the tax advisors and the ASPs, have to jointly collaborate and work together for a successful implementation. Now moving to the second thing, the second key area is basically people say that e-invoice is just a transmission of invoice, right? Again, I would say that it's not just a transmission of invoice. there's much more beyond transmission. It's also a real-time reporting that's happening, right?
Yeah.
So that's where you ensure that your VAT treatment is right.
Yeah.
So don't see VAT in isolation with e-invoicing, because these two needs to go hand in hand. Today when I meet the client, I hear that they say, oh, we have enough time, or we have 8 months, we have 12 months. But is that sufficient? Definitely not. So last minute rush will lead to incorrect implementation. And as I mentioned previously, the incorrect implementation will land you in penal consequences both under the VAT law as well as under e-invoicing legislation. Ultimately, it will trigger FTA audits. So that's where I believe that this e-invoicing implementation has to be done well in advance and do not wait till the implementation date. Now, coming to your query on whether the IT and tax teams and finance teams should be best friends, I feel that, of course, yes, they need to become best friends, because one is that IT is responsible for transmission of invoices going forward, whereas finance team is responsible for the invoicing data per se, right? So these two need to work hand in hand, and the tax thereon should be rightly mentioned, right? The tax treatment should be rightly adopted. So if these two don't go hand in hand, or if they don't become best friends, in future FTA will ensure that they become best friends.
Definitely. It's 200% correct. The biggest mistake is treating e-invoicing just a IT project. It is not just a IT project. You have to apply all your logics of VAT, finance and IT while implementation of e-invoicing. Okay, Mahalaxmi. So you told that there should be the penalty of VAT, penalty of e-invoicing, both, if you avoid any deadline or avoid any correct information submission. So, what is the penalty expect regarding to e-invoicing VAT in your opinion?
So penalties, when we talk about penalties, as you rightly mentioned, there are penalties under e-invoicing as well as penalties under the VAT regulations, right? So one, the penalty that will be applicable majorly is for not implementing the e-invoicing on time. Similarly, there are penalties for not raising the e-invoices. So these penalties are in the range of 100 dirhams to 5,000 dirhams. Similarly, under the VAT law, if you're not raising the tax invoice, there is a penalty of 2,500 dirhams. So that's where there are numerous penalties which are going to be applicable. One, if you don't raise invoice under the e-invoicing legislations. Similarly, under the VAT law, there will be penalties which are applicable. Now, apart from the penalties, it could have consequences in terms of input VAT recovery or cash flow issues. If I do not raise the e-invoice and my buyer has already implemented e-invoicing, he could have issues in terms of recovery of input VAT, because e-invoicing legislation is applicable to them. And if you see, the VAT law has been amended to include e-invoice as part of the tax invoicing requirements. So if they do not receive e-invoices, it could not be considered as a valid document for recovery of input VAT. Similarly, from a supplier's perspective, if e-invoice is not raised and the buyer is required to implement and he has implemented e-invoicing, so what happens is he may not pay, because he cannot recover the input VAT, so he may not pay to the supplier. And again, the question, or the main question arises, can the supplier go and raise a backdated e-invoice, right?
That is very important.
So that may not be possible. So that's where, to avoid all these complications, it is better you implement as on the implementation date applicable to you.
So Mahalaxmi, thanks for your beautiful insights, intellectual insights. Your the way of explanation is very beautiful, that even a layman should understand what is the structure, framework, penalties of e-invoicing. One last question before winding up is how people can connect you. So if some businessman or someone wants to understand some critical aspect of e-invoicing, so how people can connect you?
So two ways of connecting to me. One, either you can reach out to me on LinkedIn with the profile name CA Mahalaxmi Mallya, or second way is you can reach out to my business email ID, which is mahalakshmi@evasconstantin.com. So definitely I would be happy to answer the queries that would come forth to me.
We are very happy to host you, Mahalakshmi. I hope you enjoyed it a lot, and yeah, that's it. So for me, it's supercalifragilisticexpialidocious. I hope you also enjoyed it. So just to sum up, the e-invoicing, just to sum up to our audience, the e-invoicing is not just another VAT update. It's a structural change. So first phase is VAT implementation, and the second phase is e-invoicing. That is the compliance maturity that FTA wants to introduce to the UAE ecosystem.
Absolutely, Saurabh. I hope it was really insightful, and I hope the viewers get some of the insights from this session. So, thanks once again to FintEdu for having me, and thank you to you for moderating this session.
Yeah, thank you so much. This is FintEdu. Let's talk. This is CA Saurabh Dugad signing off, and we'll see you very soon in the next podcast. Thank you.